plus $36,788 profits. This is the net result of the past trading week. By realizing this amount of money, we could make a new all-time high across our accounts. While the stock market index of the S&P 500 is decreasing in price for weeks, we make money by trading commodities. If you are also trading commodities, and especially if you haven't traded commodities so far, visit our website, which link you can find below this video. By clicking on COT report, you can see how we use the so-called Commitment of Traders report that is publicly available for our trading decisions. You can use this information as well as the live COT data that we prepared for you in this table here for your own trading plans. And if you take COT data into consideration for your own trading plan, then it is important to be aware of the 3 main mistakes in futures trading with the COT report. This is a free educational video that we prepared for you, and you can receive it through the website. Now, let's discuss the trades of this week and the corresponding results. As always, let's start with the COT strategy first. We started into the week with 2 open positions, namely 8 long contracts in cotton and 1 long contract in gasoline. Both of these trades were very well in the win. During the week, we didn't open any new positions. Instead, we closed the existent open positions. Let's have a look at the trades individually. First market is cotton. On the weekly chart, we received a buy signal in the weekly trend direction. We can see that the trend continued to the upside, contra to what the seasonal trend indicated. Thus, we could derive that there's relative strength in the cotton market. On the monthly chart of cotton, you can see the past high, and that indicates where the price of cotton can rise to. On the daily chart, you can see that we traded this market twice. The first trade was successful, then there was a correction, and we used that correction to enter the market again because we expected a trend continuation. We adjusted our stop loss and exited the market on Wednesday because we expected a further correction. And that actually appeared, as you can see here. With this trade, we made a profit of $24,440. Altogether, this trading idea brought us on the December contract of cotton a total gain of $44,440. The next market is gasoline. On the weekly chart, you can see that we received a buy signal in the weekly uptrend direction. On this chart, you can see that the resistance level has been reached that developed across 2007 and 2008. Because of this key resistance level, we decided to exit the trade on Monday, shortly after waking up. With this trade, we made a total profit of plus $13,813. Let's have a look at our champion strategy. The champion strategy is based on COT data as well, but is more suited for experienced traders that have high focus and can handle a higher frequency of trading opportunities. We started into the week with an empty portfolio in this strategy, and at the end of this week we have 2 open positions, namely one in rice and another one in soybeans. During the week we had another trade in the 10-year T-notes, and this trade brought us a total loss of $8,205. However, we still have 2 open positions in the portfolio, and those are very well in the win. Let's have a look at the trades. As mentioned, the trade in the 10-year T-notes was not successful. As you can see, the daily trend is a downtrend, and we expected that the trend continuation to the downside will realize. As you can see, while we have been conducting our short trades, the market began a trend reversal. We were stopped out twice, and because of that, for now we keep on the sideline. And if the price actually turns around into the trend continuations direction to the downside, then we will be interested again. The next market is rough rice. It's still an open position. We are in the market with 12 contracts, and we speculate on a price continuation to the upside. We use the correction to enter this market, and in our opinion, rice is heavily undervalued. We base our market opinion on the zero interest rate policies, on China's COVID-related policies, including shutdowns of Chinese harbors, as well as India's export stop. All these factors confirm our expectation of rice's trend continuation to the upside. The next market where we have an open position in is soybeans. This is a very speculative trade. We are in this market only for a short time. As you can see on the daily chart, it looks like a range market. On the weekly chart, however, before this range market appeared, there was a strong uptrend. And because of that, we decided to enter the market with a long position. However, the price reaches soon the upper resistance level of the range market. This trade was also based on fundamental news about frost in Brazil that should also have upwards price pressure on soybeans. Nevertheless, this effect didn't realize in the market price. Furthermore, the resistance level, as mentioned before, is near. And as this trade has been planned to be a short-term trade anyways, we want to exit the trade in soybeans on Monday. Our third strategy is based on weather trading. In our weather trading account, we combine COT data with fundamental extreme weather analysis. And as you can see in this week, we made a total gain of $6,740. We have 3 open positions, namely 2 commodity stocks and a position in rough rice. Let me show to you the rationale behind these trades. For our weather trading strategy, we utilize weather trading maps and, for example, news like this, that India has restricted the export of grains products. On this chart, you can see our trades in rough rice. In this week, we realized a trade where we made $1,580 profits. But as you can see, we were exposed to a huge slippage. And because our stop loss was below the low of Monday, our slippage was high. Nevertheless, our expectations for rough rice, as mentioned before, are positive. We expect to see further increasing prices based on the massive undervaluation of rough rice compared to other grain markets. Because of that, we re-entered this market. Another important event for us is the Atlantic hurricane season for this year. Here you can see that the number of tornadoes in the USA are above the average. We're using 2 commodity stocks in order to trade based on this fact. You can see that both of these stocks are in the loss. Nevertheless, compared to the decreasing S&P 500, those 2 markets show relative strength to us very clearly. Furthermore, we received news that there are wildfires in Texas, in New Mexico, and in Colorado. These wildfires are probable to have influence on the commodity markets. In the next week, we will create a trading strategy to trade the upcoming price moves. At the end, let's have a look at the commodity price index as usual. This is the CRB index. The price is still around the resistance level from the past. The price index, however, didn't bounce back but stayed around the resistance level, and because of the strong uptrend in the past months, we expect CRB index to increase furthermore. As a consequence, we expect commodity prices to increase. That's it from our side this week. We are currently planning to release a free basic training course for you as a trader. This training program is sure to be released very soon. Write in the comments whether you are interested to participate in this basic training course. Please also give us a thumb up if you liked the content and you found it valuable. Another value that is for free is a subscription to our YouTube channel. Be sure to subscribe to not miss out on future videos about commodity trading based on COT data. Thank you for your attention, and we wish you all many successful trades for the next trading week. And as always, be aware of the risk, because risk management is the key to success in trading. See you all at the next trading report.